George of the jungle, strong as he can be.
Okay, so this is going to be part 2 of the how to get a divorce that's acceptable to the underwriter or to the bank if somebody happens to be dealing with that situation. So welcome to thecreditjungle.com. This is George Anderson, and the second issue that we want to talk about, if a party is getting a divorce, and again, who's going to be lending you the money after your divorce? Not your bankruptcy attorney, not your divorce attorney. Okay, so they're great in giving you the legal advice, but again, you have to look at it from the lender's perspective. So the second thing where I see some mistakes being made in a divorce decree is when the one party is awarded what's called an equitable lien in the house. Okay, so let's just say that we have a home, that's worth $400,000 and there's a $200,000 mortgage. And if they agree to split the equity equally between the two of them, there's a couple of ways you can say this. Okay, so technically each spouse would have a $100,000 equity position in the home. How do you determine that equity position? Well, a lot of times people will go and they'll say, well, let's go get an appraisal. Okay, well, an appraisal that is ordered by the borrower or by a third party that's not a lender, it's fine if you want to use it for evaluation to determine the equity in the home. But a lender is not going to accept that appraisal when it comes time for the other spouse to refinance or take out a line of credit or do whatever they need to do to cash out the spouse who is leaving the home. So rather than spend the money on an appraisal, what I recommend is that you come to an agreement. If you guys each want to go get a real estate agent, whatever, but have them prepare what's called a comparable market analysis, a CMA, to look at what the comps are in the area. And rather than coming up with a number that would be a 50% of the value, okay, or half of the equity of the house or something like that, it's better in the divorce decree if you can specify a dollar amount. So if you can just sit there and say, okay, look, we agree that at the time of the divorce here, we owe $200, the house is worth $400, we each have a $100,000 piece of equity. So when the spouse who's leaving the home says, okay, I need my $100,000, it's best to just have it written in the divorce decree, that the respondent, the petitioner, whatever, is hereby awarded a $100,000 equitable lien against the property. Now here's the thing on why it's better to do that. Do they need to record anything against the property? No. The judge's signature on the divorce decree basically is an enforcement of that lien. So, could you record something on the property? Yeah, you could. If you wanted to cloud the title or do something like that, but it's not necessary from an underwriting standpoint. We're going to look at that and say, oh, okay, so this is not really the borrower who's staying in the home pulling out cash to get cash for themselves to be able to pay off a former spouse. This is what is considered a rate and term refinance, and that's important because a rate and term refinance has better terms or a lower interest rate than one in which somebody is using cash for debt consolidation or whatnot. The other thing is that if you're paying off an equitable lien against the property, we can go to 90% of the loan to value, whereas if you're pulling out cash, it's only 80%. So again, having that specific language in the divorce decree that you guys come to a dollar amount agreement of what you think it's going to be. Don't bother paying for an appraisal because we're not going to be able to use it. But if you each need to go and get your own real estate agent, whatever, go ahead and do that. Come to a number and just say this spouse is awarded an equitable lien in the amount of boom, and then whatever that time frame is, 3 months, 6 months, 12 months, whatever, that the spouse who's keeping the home has to go out and either come up with cash or refinance or whatever they need to do to be able to get the other spouse their equity. And a lot of times they're going to have to refinance because the spouse who's leaving is going to want their name taken off of the mortgage if it was in there as a joint account. But that really doesn't matter either if the divorce decree, going back to our first video, says that mortgage loan account number blah 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 is hereby awarded to the spouse who's keeping the home. Then again, the one who's going to buy another home, we can say, aha, we have 3 months, 6 months, 12 months, whatever the underwriting required to show that this person's making the mortgage payment Therefore, we're not counting it against the person who left the house and is now trying to buy another one with their $100,000 that they got from the spouse who kept the home. So equitable liens, just one more little piece to try to make the divorce process a little smoother if the other spouse who's leaving has to go get another home or would like to get another home sometime in the near future. Hopefully that helps you. Thanks for coming into thecreditjungle.com today. This is George Anderson. Push button, get mortgage professional, and I would love to talk with you about your situation. Have a great day.